Okay, some interesting action on the Euro USD is the topic of today's video. It's Mike Smith from Hawkeye Traders. Delighted that you could join me. As we see from the daily chart, up until yesterday, we've had a range between 108 and 110 really since the beginning of the year. So yesterday's move was quite significant and really was on the back of the Fed futures suggesting that there was a 30% chance that there wouldn't be another interest rate rise this year, weakening ISM service numbers and subsequently increasing treasuries and decreasing yields. We saw this significant move, this congestion exit, as we see here. Here's the wide bar. It wouldn't turn. We never see a new trend on a wide bar, but you'll see the buying volume coming in over the last couple of days. And consequently, we've continued to move up throughout the European session there, as you see. And we're now at 11217. And look as though we're heading towards 114 on the daily chart. So that's interesting, and that's really the reason behind it. Earlier in the Asian session, things were pretty neutral, as we'll see in a moment, but we've seen a sharp move up again. And you'll see that already on this daily bar, the volume is pretty significant. Now we're going to have a look across 3 time frames intraday. So we're having a look here at 3 time frames, as we always do with Hawkeye. We're looking at the 30, the 60, and the 120-minute charts respectively. And obviously we see this wide bar around about 6 hours ago. There's that really sort of congested area, and then around about 6 hours ago we saw this wide bar which broke these pivot highs here and ultimately into uptrend. So there's the bar of entry with the green trend, the green bar and the green heat map on the 30-minute. If we look on the 60-minute, there we go again. So a break of this pivot high here, which equates to this one here. There's the green volume in and has been for a few bars. So we're really just waiting for confirmation of that trend break and the break above this wide bar, which obviously would give us caution. There's the break on the 120-minute, and obviously from then we've continued to rise upwards. And so that would have been an ideal Hawkeye entry. We could fill back up to 114, but obviously we'll be trailing a stop quite tightly behind this particular trade. We might use an ATR levels. So let's say we entered on this bar here. We hit 5 ATR, we've just pulled back below 4 ATR. If we finish this 30-minute bar below this level, we'll get a touch of that 3 ATR. We would probably rip this off the table in terms of an exit, taking a nice sort of 60 pip trade there if it subsequently moves back up again. So we'd like to see it at the end of the bar back over 4, and then we'll still stay in this trade. If it breaks 5 and holds that to the close of a bar, we'll obviously move our stop up. So that's how we'll be trading the Euro USD at the moment. At this stage, the buying momentum behind it seems pretty strong. So next key stage really is the US Open, having already had the weekly employment figures out. Bear in mind, obviously, tomorrow is non-farm payrolls day. We may see some additional significant movement depending on that particular figure. So even if you're trading it long term, just be wary around that point. So what relevance has this to options traders? Well, look, we've traded FXE before. If we put FXE on, you can see what we traded last week. Obviously not had the movement for today yet because the market's still closed. This is the ETF that tracks the euro. At that stage, we're at 105, 107, 109 as our potential range. We actually took it off the table here for 300% profit, and obviously this has happened subsequently. Now it's broken these pivot highs at 108. We could be looking to re-enter an FXE position on a break of that 109 that we see there. Perhaps looking for a 111, 112 March bull call spread. The momentum is certainly against the US dollar, so trading a long call on this would appear to be consistent with what we're seeing here on a break of that key level. We'll see you again soon.